Okay, and welcome back, students who are taking financial accounting. And in this video, we are covering the last of the Group B problems from Chapter 8 that was assigned in the digital study guide. Note, accounting is about understanding the concepts and applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. And for this particular problem, we're basically going over the focus on decision-making aspect of the chapter, dealing with the ratios. And, again, this is not, if you've had math for business and finance or math applications, you saw these ratios in that particular subject. So this, being presented, they're being presented again in financial accounting is the second time that you would have had to study these same exact ratios. So I'm not going to go over it again. For those who didn't take math for business and finance, go out to the student community under the business group. There's a section called Math for Business / Applications. And under that section, if you go into there, I believe it's like down near chapters 20, 21, or 22, something like that. You'll see the theory videos covering these here ratios and additional assigned homework problems. So if you need additional help with that. Otherwise, what you're getting in the textbook is all that you really need. All right. So let's work these out. It says here, the following is selected data for Ibanez Industries, so 2012, 13, and 14. It says calculate the return on assets and the fixed asset turnover ratio for 2013 and 2014. Round your answers to do decimal places. Excuse me. Then it says have the ratios improved or deteriorated. Comment on the trend in both ratios. Okay, so let's work on 2013 first. So return on assets, we know that it is our net income divided by the average total assets. Okay. You should know what makes up net income, and if you've watched the theory videos, you've seen my explanation on what average means. Okay, so I'm not going to cover that again. Go back and watch the theory videos. Now, granted, you're being given information here, okay? Like, for example, you're not being told what revenue is and all the different expenses that make up the net income. You're being given net income, and that's fine. But remember that, the information can be presented in different ways, all right? And you'll have to decipher whatever it is that you need in order to figure out the particular ratios, right? So for the return on assets for 2013, I have a net income of, so for 2013, I have a net income of 151,000, and divided by my average total assets. Well, what's my average total assets? From the end of 2012, right, becomes the beginning of 2013. So I have 901,000 plus the end of 2013 of 917,000, and I divide all of that by 2. And so when I do the math, let me write this out a little bit cleaner. So I have 151,000, and this here is going to be over 901,000 plus 917,000. That's all divided by 2 because it's an average, right? And when I do the math, I end up with 901 plus 917, 151 is 1,818,123. That's divided by 2. So that's 151 divided by 2. That gives me 909,000. And if I take 151 divided by 909, I end up with 16.61%. Okay, so that's my return on asset for 2013. Right now, for the fixed asset turnover ratio, I have my sales over my average fixed assets, right? So my fixed asset turnover ratio is equal to my sales for 2013, which ends up being 1,582,000, and this is going to be over my average fixed assets. So my average fixed assets, property, plant, and equipment ending at the end of the year was 736,000, plus that was the beginning, plus the ending is 764,000. And I'm going to divide that all by 2 because it's an average. And I'm not going to go through all of this here, math here and here. All right, you can just plug and play and follow along. And that ends up being, my turnover ratio ends up being 2.11. All right, so I'm going to just write this up here. For 2013, my return on assets is equal to 16.61, and the turnover ratio is 2.11. That's 6.61%. (16.61%) and 2.11. Excuse me. Okay, so we're pretty much going to end up be doing the same exact thing for 2014. So pause the video, write this down if you have to right now, because I'm going to erase it. And we're basically going to do the same exact thing, except we're going to be using the numbers from 2013 going on to 2014. It's not that hard. So for 2014, all right, return on assets is equal to my net income is, for 2014, is 142,000. And that is divided by the ending. The ending of 2013 becomes the beginning of 2014, plus the ending for 2014. Since it's an average, we're dividing by 2. And if we do all of the math, we end up with 15.40%. Okay, so for the turnover ratio, we are using the sales, right? So the sales are, for 2014, is 1,468,000, and that is going to be divided by my fixed assets. Well, ending of 2013 becomes the beginning of 2014. That's 764,000, plus the end of 2014 is 768,000, and I divide that by 2 because it's an average. And so when I do all of the math on that, I end up with 1.92. Right? So for 2014, I have my return on assets is equal to 15.40, and my turnover ratio is equal to 1.92. Okay, so Number 2, have the ratios improved or deteriorated? Comment on the trend in both directions. So the difference between, for the return on assets, right, we're looking at in 2014 going from 16.61% declining down to 15.40%. Okay, so its return on assets has decreased, which means it's just less profitable in relative to its assets in and of itself. Okay, and the turnover ratio started out at 211, and it also decreased down to 1.92. Because it's not turning, like, since that's a decrease, it is also performing, it's underperforming from 2013 going into 2014 because it's not turning its it's not turning its assets over at the same rate. It's turning it over less, meaning, well, let's just round number. Well, if it was a 2.11, that means it turned over its assets 2.11 times per year. In the next year, it only turned it over 1.92, so it's not turning its assets over. What are assets? Inventory. Okay, so it's not selling as much of its inventory as it was, and that's reflected by the sales. Okay, and you can see in 2013, its sales were 15,582,000. Well, its sales for 2014 was 1,468,000. So it's not selling as much of its inventory, and its inventory is part of the assets, and so that's why the turnover ratio is less this in 2014 than it was in 2013. And of course, without having less profit from one year to the next means my return on my assets is less. Okay, because if I have this asset, and I'm not making as much money on those assets, right, which is evidenced by its decline, right, means I'm not making as much net income. I'm not selling as much during the course of the year. Okay, I don't have as much profit, I should say, not selling as much. Well, that's reflected because of my sales being less, assuming that my expenses remain the same. Okay, but because if I kept my net income the same, that means I'm not kept my net income. If I keep my expenses the same, that means because I'm making less sales means I have less profit, which means I have less return on my investment. Okay, so that's kind of how that works. All right, so with that said, again, go ahead and pause, rewind the video, watch it again, read the book. I don't feel like in financial accounting the ratios are covered as extensively, even though it doesn't, all you need to do is just present the ratio and present an example of it for you to be able to follow from. But again, if you need more help, go back to the Math for Business/Application section of the student community under the business group. And there's more explanation of the assets themselves. I'm sorry, the ratios themselves there. If you still don't get it from watching the videos, feel free to contact an instructor, and we'll be more than happy to help clarify it for you. Okay, so with that said, we're done with Chapter 8, and we'll see you all for Chapter 9.